Welcome. In this video, I am analyzing Vardhaman Textile, Indo Count Industries ICIL and Arvind Ltd. These are all into textile manufacturing. So let's begin our analysis by looking at the current market price. Vardhaman is trading at 1058, ICIL is at 61 rupees and Arvind is at 39.3 rupees. Let us look at the quarterly analysis first, what it has managed to gain in terms of sales and profits over its previous quarter. So this is YOY comparison. Vardhaman has gained by 5.5%. IndoCount has gained 23% in terms of sales from its previous year's quarter, and Arvind has gained 11.2% from its previous year's quarter. So all the three companies have gained compared to what it had earned as revenue in the previous quarter. Looking at the quarterly profit growth, YOY profit growth, Vardhaman has gained 1.74% over its previous year's quarter. ICIL has gained from 9 to 20 crores, so that's a 115% jump. But Arvind Limited has seen a fall from 40 to 36 crores, or from 40 to 36 crores, so that's a 32% fall in its overall net profit from its previous quarter. The fall actually should have been 10%. Why it is showing 32% is because Screener.in does not consider extraordinary losses or gains in this calculation. So this value or figure is as per Screener.in. Next, let us look at the entire 2019 sales and compare that with the current 12 months sales figure. So all these companies' data is up to date till December 2019 quarter. Vardhaman has seen a fall of around 1% in its recent 12 months sales figure. ICL has seen a 5.8% growth. In 2019, the total sales was 1,900 crores. Whereas in the recent 12 months it has increased to 2,000 crores. Arvind has also seen a 3.6% growth from 7,100 to 7,300 crores. In terms of profit growth from its previous year, that is from 2019 to recent 12 months, Vardhaman Textile has seen a degrowth in its profit of 6.94%. That is, in the recent 12 months, the profit has dropped to 608 crores. IndoCount's profit has fallen by 15% from 60 crores to 51 crores in the recent 12 months. And Arvind's profit has fallen from 252 to 179. So that's a 28% drop. So Arvind has seen a highest fall in the recent 12 months in terms of profits. Let us compare the net profit and the cash flow from operations, how much profit the company has declared and how much cash it has actually received through operating activity. Vardhaman Textiles net profit last year was 653 crores, against which it has just received 76% in terms of cash. That is, only 499 crores was received in cash. So basically the cash coming in is less than the profit declared. We want it the other way around. IndoCount showed a profit of 60 crores and received 215 crores in terms of cash earnings, that is through cash flow from operations. That's a 3.5 times higher than the profit declared. Arvind's cash was the highest against the profit declared by 9.3 times or 937%. So we want cash to be coming into the business through operating activity against the profit declared. The highest fall in terms of 52 weeks low was seen for Arvind Limited, which has fallen by almost 60% from where it was 52 weeks back. ICIL has fallen around 11% and Vardhaman Textile has fallen around 8.3% from 52 weeks back, or almost 1 year back. So Arvind has seen the highest fall and Vardhaman has seen the lowest fall. Next, let us compare the latest price earning with its averages. We want the price earning to be as low as possible, or around the average, or around what other peer group companies are trading at. Vardhaman is available at 10 times, and that's higher than what it was trading in the last 5 years on average at 7.7 times. ICIL was trading at 7.7 times and is trading at a discount to where it was 3 and 5 years back. 3 years indicated in blue and 5 years average indicated in green. So this is available at a discount price. Highest discount was seen in Arvind Ltd. Its current price earning is at 5.7 times. That is, its price is available at 5.7 times the profit per share of the latest year. And it's been on an average trading at around 22 times. So this has seen the highest fall in terms of price to earnings. Next, let us look at where the price was compared to the operating cash flow per share of the company. Vardhaman Textiles was trading at 12 times its operating cash flow. ICIL was available at 5.6 times, and Arvind is available at the lowest of 0.4 times. So Arvind is available at the best available ratio of 0.4 times, because this company is earning huge amount of cash. As we saw earlier, against the profit declared, it was earning cash of almost 9.5 times higher than its profit. So price to OCF will also be the lowest, and this is the best OCF available for Arvind Ltd. We should buy when the price to OCF is below 25 times. Next, let us look at the valuation ratio price to book. Here we have to buy below 2.5 times. So whenever the market cap is around 2.5 or below the net worth, at that time we have to buy. So Vardhaman was available at 1.1 times, meaning the market cap and the actual book value or net worth of the company was almost similar. Same is the case with Indo Count as well. 1205 was the market cap and 986 is its net worth. So very nearby to its net worth. Arvind is available at a discount to its actual net worth. So the market participants have discounted it. Market participants have hugely discounted Arvind Ltd from its book value. The company is saying that it is worth 2,700 crores, but the market thinks it is only worth around 1,000 crores. So that's a discount of 0.4. We should buy when we are getting it at a discount, provided all ratios are intact. Next, let us compare the PEG ratio by looking at the latest price earning and see what is the profit growth rate of the last 5 years. So that way we can understand whatever price we are paying for the earnings, we are getting a good growth rate in that earnings too. Then it would make sense to pay that price earning. Vardhaman Textiles was available at 10 times its earnings, but the earnings has seen a degrowth of around 1.09%. So that's a PEG of -9. So what we want is that whenever you are paying for the earnings, whatever multiple we are paying for the earnings, we want to see earnings growth as well. So in this case, there is a degrowth in its earnings from last 5 years CAGR. IndoCount has seen the highest degrowth in its growth rate in profits at -11.57%. So this is how the profit has been falling from where it was 5 years back. So that's a negative PEG of 0.7. Although we are paying 7.7 times, we are not getting any growth in that earnings. Arvind Ltd has also seen a negative growth or degrowth in its profits from where it was 5 years back. So all three companies have seen a different growth drop in profits over where it was 5 years back. So this also has a negative PEG of 0.8. So when we look at all three companies, Vardhaman has seen the lowest fall in its profit or degrowth in its profit compared to both ICIL and Arvind in the last 5 years. Now when we look at the profit growth rate of 3 years, In the recent 3 years, Vardhaman has picked up its profits at the rate of 2.8%, and we are paying 10 times the earnings. So the PEG is 3.6, that is 10 divided by 2.8. We should buy when the PEG for both 5 and 3 years is below 1.5. ICIL is available at 7.7 times price earning, but again we see a very high degrowth in the recent 3 years. Not only has the profit fallen from 5 years back, but from 3 years back it has fallen much faster at 37.9%. So therefore the PEG comes down to negative 0.2. Arvind has seen a 6.8% of degrowth in its profit from 3 years back. Therefore a PEG of negative 0.8. We should look for a PEG between 0 and 1.5. Next, let us look at the profit growth rate of 5 years and 3 years side by side. Vardhaman's profit had fallen by 1.1% in last 5 years, whereas in the recent 3 years it has seen a growth of 2.8%. IndoCount has seen the highest degrowth in its profits for both where it was 5 years back as well as 3 years back. In the recent 3 years back, it has fallen much faster than its 5 years degrowth rate. Arvind has seen a degrowth of 7% from 5 years back and 6.8% from 3 years back. So all the three companies have some pressure, but it seems Vardhaman Textile is improving in the recent 3 years. Similarly, let's look at the sales growth rate from where it was 5 and 3 years back. Vardhaman's sales has been growing for both 5 and 3 years, so this is a good value. IndoCount's last 5 years, the sales has been growing at 5.7% CAGR. If you do not understand what CAGR is, there is one of the videos in ratios playlist. You can look at the CAGR growth rate video. IndoCount in the recent 3 years has seen a degrowth of negative 2.1% in its sales. So the sales has fallen from where it was 3 years back at the rate of 2.1%. Arvind has seen a very minor growth rate in its sales over a period of 5 years, and in the recent 3 years has seen a high degrowth of negative 3.8%. So Arvind has done the worst in terms of sales growth, because sales growth is very important to look at. That's the top line from where the profits flow into the company. Next, let us look at the return on equity and compare it with its 5 and 3 years average. Vardhaman's latest ROE is at around 12.4%, ICIL is at 6.2% and Arvind at 7.7%. So ICIL has done the worst in terms of generating returns for the shareholders in the latest year. Compared to the averages of 5 and 3 years, we see in the last 5 years it was giving a return of 23% highest on an average basis, and it has dropped in the recent 3 years to 16.1%. My benchmark for ROE is around 15% or above. Both the other companies, Arvind and Vardhaman, have not managed above 15% of growth rate. Vardhaman's average 5 years and 3 years and the current ROE was very nearby to each other, and Arvind too has seen a degrowth or reduction in its ROE generation from 10.3% on average 5 years to 7.7%. The highest drop in ROE for the latest year was seen for IndoCount. In terms of return on capital employed, that is debt plus equity on that what was the EBIT being generated, and then comparing it with its 5 and 3 years average, Vardhaman has generated 14.1% return on capital employed, the highest in the group, whereas both IndoCount and Arvind has generated slightly above 9% of ROCE. The highest ROCE again for the last 5 years on average basis was of ICIL at 27%, and in the recent 3 years was 20%. So when I'm looking at the current ROCE, I would also want to compare it with its average of what in the last 5 years or 3 years it has been doing. So I'm not just looking at the short term, but I'm also looking at the long term values of 5 and 3 years to understand if this is just an aberration or a one time fall in ROCE and ROE. So as if we look at for the 5 and 3 years, which I generally look at, it seems ICIL has generated the highest ROE and ROC on an average basis, but in the latest year it has seen quite a drastic fall in its return ratios. In terms of ROA and comparing it with the 5 years average, return on assets compares the profit generated on the total assets employed by the company. Vardhaman has generated around 8.5 and its average was around 7.9. So it has generated in the latest year of 2019 above its average. ICL latest ROA has fallen way below what it was generating on an average basis in the last 5 years. So I'm more concerned with the 5 years and 3 years data than for the latest year, as 1 year a company could have problems. So I generally don't consider the latest one, but just for comparison's sake I'm looking at all these numbers. Arvind on an average basis in the last 5 years was generating 4.9, and in the recent year it has dropped to 3.8%. So a slight drop in its return on assets. Next we'll look at what is the sales being generated on the total assets employed by the company. Vardhaman has generated less sales than its assets employed by the company. ICL has generated highest turnover in terms of sales to assets, and Arvind has generated 1.3 times, very nearby to ICIL's asset turnover. Next we'll look at the inventory turnover and compare it with its turnover of 3 years on average. Vardhaman's inventory turnover was almost similar, 3 times for 2019 compared to its average of the last 3 years. ICL also has done an inventory turnover of around 3 times compared to its average of around 5 times in the last 3 years. Arvind's turnover was around 4 times compared to around 4 times also in terms of average for the last 3 years. So I have added the decimals, so now the turnover is much more clearer to understand. Next we'll look at the 5 years profit that the companies have earned and compare it with how much cash it has earned during that 5 years. Vardhaman has earned around 1.5 times more or 155% more than the profit of the last 5 years. So company has earned around 2,759 crores in last 5 years as profits, against which its cash earnings was 4,280 crores. ICL has earned almost similar cash to what it has shown as profit, and Arvind too has earned 2.8 times more cash than what it declared as profits. So all of these companies' profit to cash flow from operations are good. Next we are comparing the cash flow from operations of 5 years and looking at how much free cash is left with the company and how much was invested in buying assets over a period of 5 years. So the total cash for Vardhaman earned during these 5 years was 4,280 crores. Out of that, 50% of that was utilized in buying of assets and 50% is left over as free cash to be distributed either as dividend, bonus, buyback or loan repayment. IndoCount has utilized only 13% of its cash earned through operating activity in buying assets. So it has not invested a very high amount in terms of Capex or invested in assets. So it has maximum free cash flow left with it at 748 crores. Arvind's total cash earned during the 5 years was 4,500 crores and 57% of that was used in buying assets and 1,963 is left over as free cash. So this ratio is very important to understand. Next, we are looking at the recent 12 months profit after tax value and comparing it with its average of the last 5 years. So this way we will understand whether the profit being earned in the recent 12 months, is it above the average or below it. So in the recent 12 months, Vardhaman Textiles has earned around 608 crores compared to 2019 where it earned 552 crores. So there's a 10% growth rate in terms of profit. ICIL's profit has fallen by almost 70% over its last 5 years average. In the recent 12 months, it has just earned 51 crores compared to 166 it was earning in the last 5 years. So this value is not good at all. Arvind too has seen a fall in its recent 12 months profit from its average by 43%. On an average, it was earning 316 and 179 in the recent 12 months. So that's a huge fall of around 43% from its average. So only Vardhaman seems to have done better in terms of increasing its profits in the recent 12 months. Next, we'll look at the debt to equity and interest coverage. Vardhaman's debt was just 0.3 times, even ICL is 0.5 times, and Arvind is nearing very much to 1 times. My benchmark or cutoff for debt to equity is 1 times unless and until there is high growth in the company and the company is earning profits on those growth. Vardhaman's coverage or interest coverage is 6.9 times, which means the EBIT is around 6.9 times higher than the interest cost it is paying. And I want the interest coverage to be above 4 times at least. ICIL's coverage is also above 4.4 times. Because Arvind's debt is high at 1 times, its coverage has fallen below 4 times to 2.1 times now. Next, we'll look at the contingent liability percentage. How much is the additional liability that the company may have to incur compared to its net worth? So, Vardhaman Textile is net worth is at around 5,700 crores. On that, its contingent liability is just 5%. ICIL's contingent liability is just 8% on the total net worth. But Arvind has seen a very high contingent liability percentage of 56%. Its net worth is 2,700 crores and its contingent liability is 1,526 crores. I generally don't want to buy into companies who has more than 30% of contingent liability when compared to the net worth. Next, we'll look at the promoter holding and pledged shares. All the 3 companies' promoter holdings is above 40%. The highest was for Vardhaman Textile and ICIL, both above 50%. Arvind's promoter holding is just 44%. Both Vardhaman and ICIL's pledge is 0%, so no shares of the promoters are pledged. Arvind's promoters have pledged around 4.1%. My cutoff for pledged shares is 20%. So anything about 20% of promoter holding being pledged is a red flag for me. Next, we'll look at the debtors to sales percentage and then the debtor days. Debtors to sales percentage signifies how much payment is still to be collected from the customers against the current year's sales figure, that is 2019 sales, and how much is the payment to be collected from the customers in 2019. So we don't want the debtors to sales percentage to exceed 30. Vardhaman, ICIL and Arvind are all collecting efficiently from their customers, and they've kept their customers collection to less than 20% or rather less than 15%, and they are also collecting very efficiently from the customers within 90 days. In fact, all of them are collecting in less than 50 days from their customers. So at least in terms of collection from its customers, it is very efficient. Let's look at net profit margin of 2019. Vardhaman gained around or earned around 10.6% on its total sales, but ICIL and Arvind both managed to generate just 3.1 and 3.2% respectively. So there is a profit pressure or margin pressure for both ICIL and Arvind in 2019. In terms of dividend yield, at the current price, Arvind is generating highest dividend yield of 5.1%. So if someone is buying at today's price, and if we consider how much dividend it paid last year, we can expect that if the company keeps paying the same dividend, we can generate around 5.1% of dividend. ICIL and Vardhaman are paying around 1.1 and 1.7%. So that concludes my analysis of these three companies. Let us look at the numbers, give them score, and try to understand where each of the company is standing. Arvind has got the lowest score of 39, followed by ICIL at 59 and Vardhaman Textile at 77. I have given them scoring from 1 to 3 or negative values as well if the numbers are out of the benchmark that I have set for myself. So as per the scoring method, Vardhaman Textile has got the highest number of 77, followed by Indo Count at 59. One should avoid Arvind because it has got the lowest score, and if one has to go through the ratios again, then we can analyze why we should avoid Arvind. So if you have to look at the negative points, Arvind's quarterly profit has YOY has fallen by 32%. The PEG of both Arvind and IndoCount are negative. Even PEG of Vardhaman is negative for the 5 years, and for the recent 3 years both ICIL and Arvind have a negative PEG, which means there's a degrowth in the profit from both 5 and 3 years back, which we can see here. 11% degrowth in profit from 5 years back and 37% degrowth in profit from 3 years back, whereas Arvind has seen is 7% and 6% degrowth. All these I have already analyzed in the graphs. Here I am just looking at quickly analyzing what are the negative values for both Arvind and IndoCount. Sales has also fallen for the last 3 years for both ICL and Arvind. The profit from the previous year to the recent 12 months has fallen for all the three companies. The highest profit drop was seen for Arvind at 29% in the recent 12 months. Also, Arvind's contingent liability is very high at 56% of its net worth. So this is also a negative for me. So this concludes my analysis of these companies which are into textile manufacturing. Thank you for watching this video.